In boardrooms and trading floors across the world, an invisible battle is unfolding, not with armies, not with missiles, but with dollars, treasuries, and silence. America thought it controlled the rules of global finance, but tonight, we expose the truth. A hidden financial war has begun, and the first cracks are already shaking the empire. This is not just a story about China. It's a story about the collapse of an entire system. Today on Live News 16, we uncover a silent but earth-shaking conflict erupting under the world's nose. The United States tried to flex its financial muscle against China, but instead, it may have set off a hidden bomb inside the global economy. No angry speeches, no flashing headlines, just cold, strategic moves, and the very foundations of U.S. financial power are beginning to tremble. Buckle up, because this isn't just about one IPO. It's about a new financial world order being built in real time. Good evening, I'm Janet MacArthur. It all started quietly, almost insignificantly. An unassuming IPO on the Hong Kong Stock Exchange. The company, CL, a Chinese giant in lithium-ion batteries, fueling everything from electric vehicles to future submarine fleets. JPMorgan and Bank of America had their pens ready to underwrite a $5 billion deal. But just days before the launch, Washington sounded the alarm. The National Security Council whispered an urgent warning. CL wasn't just making batteries, they were building the arteries of China's next-gen military and tech supremacy. The IPO wasn't on Wall Street. It wasn't even in America, but that didn't matter. Under silent pressure from Washington, both American banks pulled out overnight. Within hours, CL's valuation was gutted by $210 million. But the real damage wasn't to the Chinese company, it was to the global perception of American finance itself. Washington had fired a shot, but would soon realize it wasn't ready for the recoil. The message was loud and clear: America would use its banks as political weapons, even beyond its borders. Analysts quickly coined the term extraterritorial capital deterrence. Supporters in D.C. applauded the move. They said America was finally getting serious about cutting off China's tech ambitions. But critics warned this wasn't strategy. It was financial self-sabotage. Wall Street had always thrived because it operated freely, predictably, above the fray of political games. But now, if American banks couldn't operate independently abroad, what happened to their relevance? What happened to trust in U.S. financial neutrality? By meddling in Hong Kong, the U.S. had admitted something profound. The old rules of global finance were dead, and from the ashes, a new, more dangerous game was beginning. If Washington expected a tantrum from Beijing, they were wrong. There were no sanctions, no fiery press conferences, no threats. Instead, China retaliated in the most devastating way possible, with silence. Within 72 hours of the CL sabotage, Chinese state banks and sovereign wealth funds began a cold, quiet sell-off. Billions of dollars in U.S. treasuries were dumped without fanfare, no headlines, no warning. According to Treasury International Capital data, China cut its U.S. holdings by $78.5 billion in just one quarter, the sharpest drop since 2016. And that's just the beginning. China wasn't panicking. It was executing a long-planned escape strategy, from dollar dependency, from Wall Street's grip, from America's financial chokehold. So where did China's money go? Not into more dollars, but into gold, BRICS infrastructure bonds, and yuan-denominated assets. Physical gold purchases by Chinese institutions exploded to a 5-year high. Meanwhile, Chinese state banks started quietly funneling billions into Japanese government bonds, stable, liquid, and crucially, non-dollar assets. China is not just buying differently, it's building differently. New trade corridors, local currency settlement systems, lending mechanisms that don't touch the dollar at all. This isn't diversification, this is revolution. Beijing is carefully erecting a financial ecosystem designed to survive and thrive without America. Back in Washington, the consequences began to ripple. With China pulling back from treasury auctions, demand for U.S. debt is shrinking, forcing borrowing costs higher. Not because of inflation, not because of recession, But because America's biggest foreign creditor isn't showing up anymore, higher yields mean more expensive government debt servicing, and that weakens the dollar's global standing, making U.S. debt look less like a safe haven and more like a risk. In trying to control China, Washington accidentally cracked its own armor, and the cracks are spreading fast. Instead of recalibrating, Washington chose escalation. In April 2025, the Senate Banking Committee pushed through a bipartisan bill targeting over 220 Chinese companies linked to defense, AI, biotech, and telecommunications. If passed, American investors, pension funds, ETFs, asset managers will be forced to liquidate nearly $812 billion worth of holdings. BlackRock, Goldman Sachs, Vanguard, no one will be spared. These companies aren't just Chinese. They're woven deep into global supply chains, tech, and finance. This forced decoupling would fracture markets across both Asia and America. And worst of all, Wall Street, long the beating heart of global finance, risks becoming a provincial player in an emerging Asian-led order. Meanwhile, China isn't wasting time. Beijing's Central Financial Commission unleashed a $423 billion war chest to build its own financial infrastructure. No more dependence on Western banks, no more Western credit ratings. By 2026, Moody's, S&P, and Fitch will be phased out of Chinese bond markets, replaced by homegrown rating agencies aligned with Beijing's vision. In Shanghai, the new international board is exploding, recording $112 billion in foreign listings in just the first quarter of 2025. Firms from Southeast Asia, the Middle East, even Europe, where once they rushed to New York, now they're choosing Shanghai, where capital comes without political strings. And China isn't building alone. The BRICS bloc, once dismissed as a loose political alliance, is rapidly becoming a parallel financial order. The BRICS interbank payment system handled over $56 billion in cross-border transactions last quarter, a 320% surge compared to just 2 years ago. Saudi Arabia issued a $4 billion bond priced entirely in yuan, and it was 4 times oversubscribed. Across Asia, Africa, and Latin America, the message is spreading: you don't need Wall Street anymore. You can raise capital, settle trades, and grow your economies without touching the dollar. Tonight, we're witnessing more than a trade war, more than a decoupling. We are witnessing the slow, silent detonation of a financial empire built over decades. The United States tried to squeeze China, and in doing so, revealed its own vulnerabilities. Because while Washington argues and legislates, Beijing and the world are building lifeboats, bridges, and new systems at lightning speed. This is no longer about size, it's about agility. And in the race for the future of global finance, the world isn't waiting for America's permission anymore. If you found this deep dive eye-opening, don't forget to hit the like button, subscribe, and share your thoughts in the comments. Is this a temporary shift? Or is America's financial reign truly coming to an end? I'm Janet MacArthur, and you're watching Live News 16. Stay tuned, because the next move in this silent war could reshape the entire future of global power.